Everything costs more. For many Nevada homeowners, that simple statement has become a daily reality. The interesting thing is that for many families, the mortgage payment hasn't changed at all. The mortgage payment may be exactly the same as it was 3 years ago, or 5 years ago, or even 10 years ago. Yet somehow life feels more expensive than ever. The grocery bill is higher. The gas tank costs more to fill. Insurance premiums continue increasing. Property taxes seem to rise every year. Utility bills are higher. Vehicle repairs cost more. Home maintenance costs more. Medical expenses cost more. Even simple trips to the store often end with sticker shock. And for many homeowners, that's where the real financial pressure begins. Not because they bought too much house, not because they made bad decisions, not because they were irresponsible, but because the cost of everyday life continues rising around them. That's a very different conversation than the one many people assume. When someone falls behind financially, people often assume there was a major event, a job loss, a divorce, a medical emergency, a catastrophic event. And while those situations certainly happen, many homeowners today are facing something different. They're being squeezed, slowly, month after month, year after year. Every increase may seem manageable by itself. An extra $20 here, an extra $50 there. A slightly larger insurance bill, a slightly larger tax bill, a few more dollars at the grocery store. Nothing feels devastating in the moment, but over time, those increases begin stacking on top of each other, and eventually, homeowners begin noticing something important. The money doesn't go as far as it used to. The monthly budget becomes tighter. The savings account grows more slowly. The emergency fund stops increasing, and financial flexibility begins disappearing. That's a problem because flexibility is what allows homeowners to absorb life's surprises. When the water heater fails, when the transmission goes out, when a medical bill arrives, when a family member needs help, when an unexpected expense appears. Flexibility is what keeps a challenge from becoming a crisis. And when flexibility starts shrinking, stress starts growing. Let's talk specifically about Nevada. Nevada has experienced significant growth over the past several years. Property values have increased, demand has increased, development has increased, and while those things can create opportunities, they can also create challenges. Many homeowners have seen property taxes rise, insurance premiums have increased, construction and repair costs have increased, and homeowners who purchased years ago are now facing expenses they never anticipated. Consider a homeowner who purchased a home in 2018. Their mortgage payment may still be manageable. In fact, they may have a fantastic interest rate. But what has happened to everything around that mortgage? Fuel costs increased, food costs increased, insurance costs increased, property taxes increased, utilities increased, maintenance costs increased. Suddenly, the mortgage isn't the problem. Everything surrounding the mortgage is the problem. That's an important distinction, because many homeowners don't realize how much financial pressure can build before they ever miss a mortgage payment. Financial challenges rarely start with the mortgage. They usually start somewhere else. The grocery bill gets larger. Credit card balances start carrying over from month to month. Savings gets used for routine expenses. Repairs are postponed. Vacations are canceled. Household purchases are delayed. The homeowner begins making adjustments. At first, those adjustments feel temporary, then they become normal, and eventually they become necessary. That's when homeowners should start paying attention. Not because disaster is approaching, but because awareness creates options. Let's talk about retirees. Retirees are facing some unique challenges in today's economy. Many entered retirement believing their housing expenses would become more predictable. After all, they may have a fixed mortgage payment. They may even own their home outright. But owning a home doesn't eliminate rising expenses. Property taxes still increase. Insurance still increases. Maintenance still increases. Utilities still increase. Food still increases. And for retirees living on fixed incomes, those increases can create substantial pressure. A retirement income doesn't automatically increase every time expenses rise. That's why many, Retirees are feeling squeezed despite doing everything right. The same thing is happening to working families. Income may be increasing, but expenses are increasing faster. A raise doesn't necessarily improve someone's financial position if every major expense rises at the same time. That's what many Nevada homeowners are experiencing today. They're working hard, they're earning more, yet somehow it feels like they're falling behind. That feeling isn't always about income. Sometimes it's about expenses. Now let's discuss warning signs. Not warning signs of foreclosure. Not warning signs of disaster. Warning signs that financial pressure is increasing. One warning sign is relying on credit cards for everyday expenses. Another is using savings to pay routine bills. Another is delaying maintenance because money feels tight. Another is carrying balances that previously would have been paid off. Another is feeling anxious whenever an unexpected expense appears. These warning signs don't automatically mean a homeowner is in trouble, but they can indicate that flexibility is shrinking, and shrinking flexibility deserves attention. One of the biggest mistakes homeowners make is waiting too long to evaluate their situation. Many people assume they should only review their finances when something goes wrong. The opposite is often true. The best time to understand your position is before things become urgent. When homeowners understand their budget, they make better decisions. When homeowners understand their equity, they have more information. When homeowners understand their options, they have more control. Control is important because financial pressure often creates uncertainty, and uncertainty creates stress. When people don't understand their situation, they often assume the worst. They imagine problems becoming larger than they really are. They postpone decisions because they don't know where to start. And unfortunately, waiting rarely improves financial pressure. Information improves financial pressure. Planning improves financial pressure. Awareness improves financial pressure. Let's talk about something else: pride. Many homeowners are reluctant to discuss financial challenges. They don't want friends or family to know. They don't want to appear vulnerable. They don't want to admit that expenses have become difficult to manage. That's understandable. But financial pressure is affecting people across every income level. It affects retirees. It affects professionals. It affects business owners. It affects working families. It affects people who appear successful from the outside. There's no shame in recognizing financial pressure. The real risk is pretending it doesn't exist. Because problems become easier to solve when they're identified early, not later. Early action creates flexibility. Early action creates choices. Early action creates opportunities. That's true whether someone is dealing with rising expenses, increasing debt, shrinking savings, or concerns about future affordability. Now let's look ahead. Will food become cheaper? Will fuel become cheaper? Will insurance become cheaper? Will property taxes decline? Nobody knows. What we do know is that homeowners cannot control the economy. They cannot control inflation. They cannot control utility costs. They cannot control insurance premiums. But they can control how well they understand their own situation. They can control how early they evaluate their finances. They can control whether they seek information. They can control whether they create a plan. And that's where better decisions begin. Not with fear, not with panic, not with worst-case scenarios, with information. Because information creates confidence. Information creates clarity. Information creates options. And options create flexibility. Before we finish, let's talk about the Nevada Strategic Property Group. Nevada Strategic Property Group is a collaborative team serving Northern Nevada, including Skip Benton, Tony Taylor, and Savannah Lee with Coldwell Banker Select Real Estate, along with Angie Salcido with Premier Credit Solutions. Our mission is simple: help homeowners understand their position before situations become urgent. Help homeowners understand available options before financial pressure becomes overwhelming. Help homeowners make informed decisions based on facts instead of fear. Because when homeowners understand their situation clearly, they're more likely to make decisions that protect both their home and their future. Everything costs more. That's the reality many homeowners are facing today. The good news is that understanding your situation is still free. And understanding your situation may be the most valuable financial decision you make.